If you've ever had a trading day that felt wrong before the market even opened, this is for you. Not because of market conditions, not because your strategy suddenly stopped working, not because of bad luck. You lost before you even clicked buy, and that's the part almost nobody understands. Most traders believe discipline breaks during the trade. They think the mistake happens when they move a stop loss or chase a candle. But the truth is harsher. You lost that trade hours earlier. You lost it the moment you broke your routine. Most traders don't blow up because of one terrible trade. They slowly fall apart when they stop doing the boring things that used to protect them. It usually starts quietly. You wake up later than usual, you skip preparation just this once. You tell yourself you already know what to look for. It feels harmless, it even feels freeing. But this is exactly where performance begins to decay. Today, we're exposing a silent account killer that almost no one talks about. Not indicators, not entries, the structural integrity of your mind. Skipping preparation isn't lazy, it's a predictable setup for failure. Routine is not about productivity hacks or early alarms, it's psychological armor. Like a riot officer stepping into chaos, you don't prepare because you want conflict, but because the environment is hostile. The market is hostile. It is designed to trigger fear, greed, impatience, and panic. Your routine is what protects you, marking levels, reviewing your plan, defining risk, centering your mind. When you skip that and jump straight into charts, distracted or rushed, you're not being flexible. You're walking into chaos without protection. Performance doesn't collapse instantly. It leaks, quietly, until one day you realize you're no longer trading your plan. Routine exists to remove decision-making when emotions are strongest. When the routine was intact, you didn't negotiate with yourself. You followed a sequence. The moment that sequence breaks, every choice becomes a debate, and debates are where emotions win. Your brain treats decisions as a finite resource. This is decision fatigue. Think of mental clarity like a battery. A routine conserves energy. Same wake-up time, same preparation, same charts. No friction. That energy is saved for execution. Break routine and your brain floods with micro-decisions. Should I trade today? Did I miss something? Am I already behind? Before a setup appears, your battery is drained. So when the moment comes, you hesitate, rush, or force. Not because you forgot how to trade, but because you ran out of mental bandwidth. The brain hates uncertainty. Without routine, it searches for certainty elsewhere. It finds it in overtrading, marginal setups, and revenge trades that feel justified in the moment. Breaking routine is never isolated. You skip prep because you're late or busy. It feels harmless, but without structure, anxiety creeps in. No levels, no bias. You scan charts compulsively. You feel behind. That's where fear of missing out is born. And fear of missing out doesn't come from price moving without you. It comes from being unprepared for the move. To escape that anxiety, you compensate. You size up. You take trades you shouldn't. You're no longer trading the market. You're trading your insecurity. One small deviation early creates emotional and financial damage later. How you manage your morning is how you manage your risk. Most traders misread this phase. They think the problem is strategy. They add indicators or change systems. But the real shift happened before the chart loaded. Structure disappeared. And without structure, your edge erodes slowly, invisibly. Experienced traders fall into a dangerous illusion. They think routine is for beginners, but professionals rely on routine more, not less. Athletes warm up the same way. Pilots follow checklists every flight, not because they're incapable, but because humans drift under pressure. Your routine is your checklist: preparation, risk limits, entry and exit rules, review. These aren't optional habits, they're guardrails. Remove them and the road feels straight for a while. That's why breaking routine is dangerous. The consequences are delayed. Professionals don't treat routine as optional. If one system fails, they don't trade. Didn't sleep well? No trade. Skipped analysis? No trade. Emotionally compromised? No trade. Routine exists to make you boring, and in trading, boring is profitable. Without routine, emotional consistency disappears. One day you're calm, the next you're reactive. Results swing not because the market changed, but because you did. That inconsistency creates self-doubt, and self-doubt accelerates interference. Losses start to feel personal. You can't say you followed your process. Waiting feels wrong because structure is gone, so you force activity just to feel productive. The solution isn't dramatic. You don't need a new strategy. You need to rebuild the routine you abandoned. The same checklist, the same preparation, the same rules. Rebuilding feels harder because ego tells you you've outgrown it. Routine doesn't limit good traders. It protects them from becoming bad ones. The market doesn't reward creativity in execution. It rewards consistency. Flexible rules always become emotional rules. If performance is slipping, don't look at win rate first. Look at your days. Are you preparing the same way? Managing risk the same way? Reviewing trades the same way? If not, the damage isn't the market, it's the collapse of structure. The market is already volatile. Don't add chaos by being inconsistent with yourself. Consistent results come from consistent behavior. Review your last losing trades and ask honestly, was this the market or was this a day I drifted from my process? If you want to master trading psychology, subscribe. This channel isn't about hype or indicators, it's about the internal game. Comment one part of your routine you've been skipping and commit to fixing it tomorrow. Trade safe, stay disciplined.